South Korea and the U.S. have signed a $60 billion currency swap agreement. It's good for 6 months and is expected to cushion the Korean currency against the impact of the coronavirus. Our Kim Dami explains.
The $60 billion currency swap deal between Seoul and Washington aims to steady Korea's financial markets.
The move is expected to stabilize the local foreign exchange market that has been experiencing a rapid change in the exchange rate due to a recent shortage of dollars.
A currency swap allows the Fed to provide dollars directly to other central banks in exchange for their local currency at an agreed rate. The deal works as a financial safety net in a crisis like this one by reducing exchange rate risk and the cost of borrowing a foreign currency. The dollar continues to strengthen in the midst of global uncertainty because investors view dollars as the key global safe haven. Such a sudden demand makes the dollar even more expensive to get hold of outside the U.S.
It was a quick move by both the U.S. and South Korea. The U.S. is also trying to prevent foreign currency liquidity caused by the lack of dollars from evolving into a full-blown global crisis, and South Korea needs to stabilize the local market.
This marks the second deal of its kind to be signed with the U.S. The last such deal, a $30 billion swap, was signed in October 2008 at the height of the global financial crisis. Back then, the agreement was originally set to expire after 6 months, but was extended twice until February 2010.
$60 billion for 6 months can ease the instability for a short period. But in the long run, South Korea needs to maintain its current account surplus, and local companies need to make themselves more of an attractive investment to bring in the dollars.
The Bank of Korea plans to immediately inject the U.S. banknotes into the local market. While hinting at a possible extension of the deal, the head of central bank says it's putting all of its policy cards on the table and is ready to use them accordingly. Kim Dami, Arirang News.